Hey, welcome everyone. I just thought I'd do a video here introducing you to a couple things. Today I sent this tweet out, and I think this is, I got an email on it. Someone said, what volume am I looking at? Second off, what tweet? If you're not familiar, on my Twitter account, if you're not a part of it, I would definitely sign up. I mean, I rarely send silly things out, but when I do, you'll see why. This is our little puppy. But what I sent out, just really to get to the point here, is I said this: Emini traders, watch 28.74 to 78 level for possible short scalp. Mid-morning rally is on slight bearish volume divergence. Wait for algo sell signals to trigger. So if you have the person algo optimizer, you know that was right there a warning sign that says get ready to get short the market. What volume divergence did we have? We're going to share that with you right now because that's where the email in question is. They didn't see volume divergence. I'll show that in a second. And then how did I come up with these numbers right there? So let's just cover those three items. First off, this is the Person Algo Optimizer. This is today's trading session. We trade two lots just to tell you what this thing does, or what I've programmed mine to do. This is my settings. The Person Algo Optimizer is not a trading system. Rather, it is a product. If I can go over here, you can just see this. This is Person Algo System 16. This is the one that's in all of my clients that have this, of course. We go over here to Format. We only take trades between 8 a.m. and 3:30. So that's number one. This thing will optimize, and you can choose a start time. So if you want to trade just the open and first 2 hours, you would have an end time. And then if you wanted to trade the close, you'd start it again and end it at a specific time. This shows position calc method. We have three different ways that we can program our own trades, or you can program your own trade. One is by equity amount, one's by risk amount, and one's stagnant lot size, and we always set it at 2. We have a risk reward max trade loss on a 5-minute day trade system with 2 lots. I don't want to lose any more than 480, or if the risk is greater than 480, I don't even want to take the trade, so I'll do it manually. Sometimes you get these trade setups on big volatile days. Think about it, where you got maybe a 12, 14 handle, which we did, a $12, $600 range on a 5-minute, and you get a buy signal. Man, that's like if you're wrong and it comes all the way back down and you're in 2 contracts at 600 times 2, not so fun, right? Do that 10 times with a 10 lot. You could see that'd be $6,000 in 5 minutes on a stop out. So we want to make sure that we can backtest and optimize what the max trade loss we should take on a 5-minute system and what the max profit is in this environment. These would be 2 functions that someone would want to maintain, not optimize to adjust for or adjust for past data. But when you see the market moving and then all of a sudden we go from a 60 handle daily range to a 10 handle daily range, how can I take $500 out of a $500 daily range? You see, that's what we're talking about. Anyway, going down the list, we have different functions like trailing stop features, risk-reward ratios, buy signals, sell signals, what we want to take, low close dojis or PPS signals, right? Holding periods, how many periods. All of this is something we created to help people backtest those major functions. So that's what we end up with this particular product. Today, 2 lots up 1875 in the trades that it alerted to, both long and short. Here's the long. What the function does, it gets out at the profit target. I've shared this in videos before. Blue is the profit target. Why did it get out here? Because it gets out of half the profits and trails a stop until a function kicks in and it'll knock you out of the trade. Blue lines represent winning trades. So yes, this trade could have been a lot better if it had gotten out at the high, but it got out at the profit target and it trailed the stop in case the thing ran. It didn't run. What did it do though? It generated and got right back in like a trooper. Got out at half the profit and then got out when it darn well should have. So here's what happened. Now it starts going short. I like those shorts because this is what we tweeted about. So back to our tweet. How did we come up with bearish divergence? On balance volume, when we were making new highs, and when I said 74 to 78 up in that zone, I want to look for shorts. I'll come up with how we came up with those numbers in just a minute. But what was I talking about bearish volume divergence. Market is going up. This is volume histogram. I don't really have a clue what this is all telling me. I guess you could look at the overall trend of the volume and say, apart from the first half hour of the day, volume was tapered off, and at lunchtime it tapered off. I don't know what to read out of that, and I know that's where a lot of individual traders also feel the same way. Volume's good for maybe an individual day spike up or a small range volume day, that type of thing. But for trading, day trading, volume histogram bars are obsolete. We started to help promote and to revitalize the use of on-balance volume, but over the last couple years, it's not been as an efficient tool. Note when the market rallied and took out the number 2 point here is higher than the number 1 point here in price. Right? The number 1 point in price corresponds to that high. The number 2 price corresponds with that reading in the indicator. The indicator is making a newer high with conjunction of price. Theory states that that is a strong rally on a cumulative volume, not divergence. So person, the question's at hand. Where did you come up with bearish divergence? This is a proprietary volume indicator found on our person's lifetime package, which is what is needed for the algo optimizer. But you will clearly see what an amazing picture this brought in. The fact that we have the volume in terms of percent with the diffuser. You can see the momentum of the volume is going negative on these rallies, and then the market comes down. It goes positive, and the market goes up. But when we were at this level, I didn't tweet out, by the way, I said look for 74. So it was in this area. I said 74 to 78 is when I sent that tweet out. You can look at the Twitter timestamp. But the moral of the story is looking at the volume from this level to that level is the divergence pattern in the volume that we created. This is an number 1 indicator in my books. I got more information on it in just a minute. However, we talked about that bearish divergence. That was one. So we had that. We talked about resistance, and I said turn your algos on shorts. So if you had a algo system that said get short, your first big signal came in a PPS sell signal as well as a low close doji. You can clearly see it, when it's in a long, it reverse position. This thing is just off the chart amazing. Yes, it got out of the product because it had a trailing stop. It didn't get to profit, and it trailed the stop. It knocked out the trade. Look what it does, though. It gets right back in like a trooper. Gets in back in the short. It gets out at the profit target. The trailing stop, it bounced up, stopped the position out. That's okay. It got back in short, and this market is just read the market like a T in a very weird trading session. As you can see, that trend, once it started to develop, our volume indicator is off the chart down. On balance volume kind of struggled and struggled and struggled. So the point is, when you look at volume here, I don't know what this does for anyone. This is okay, but it's becoming obsolete. And this is probably the tool of the future. Very sophisticated indicator. Now let me show you something else that we do a lot in, and that's the VIX. And first and foremost, when we go over here, I want to just quickly cover how the heck did I come up with that target resistance? And the answer is pivot. We had a pivot resistance in the spiders. This is the spiders. Now, how does that relate to the S&P 500? Real quick, we go to S&P 500. And then we're going to expand, and here is the exact number of our resistance upper target, which said for today to sell against 228.78. I had between 74 and 78. So we had a target of a profit target on an algo system, 74. We had monthly pivot at 78. I felt somewhere within those 16 ticks, look for a sell signal. It may come this afternoon. Longer term, I'm a little concerned to the fact that either the volume needs to really kick into high gear or price are going to stall and maybe correct a bit. If the correction, it's probably due for a correction because we've been losing momentum since June. We are absolutely in summer market conditions. So the market went up with ease. on what would be considered lackluster volume. We'll see once everyone gets back, once our government starts coming back from vacation, we're going to start to see what the real issue of the Federal Reserve and interest rates on a global scale is going to do to the equity market. My suspicion is we're going to see some volatility, and whether the market goes up, it's not probably from this point going up forever, and we're more than likely to see a correction as we get into September and then obviously October. Why would I even say that? Because from a testifiable picture, at least I would say, A, the volume here is divergent. B, the momentum of price is starting to weaken. Anyway, so that's just that. Now let me share with you what I wanted to get into about a different way of looking at the market. This is the VIX and using the Person Algo Optimizer. And not only is the thing out of its short trade before the day it had this buy signal, but all of the models that we use that we're trading with, we're all flat this market. But here's an interesting thing that you may not consider. Noted that the S&Ps were what? At a new high for the year, right? Or the spiders broke out, correct? I mean, let's take a look one more time. So you go over here to our advanced decline page and we look at the spiders, and you can say, looks pretty close to a all-time high in the market, because this was the high, and then today we had an all-time high. We didn't close greater than, but we had an all-time high. So that's an all-time high. And I'm pretty sure you'll agree with me that we made a newer high. If it's an all-time high, we took out the the first few days of August high, we took that out, right? So price spent a whole month from where we started. Over time, we really haven't gone very far, but that's another topic. Looking at the daily volume, by the way, since we're here, on balance volume looks kind of healthy. It's pointing up. Our volume indicator significantly showing what? A weakening trend. This thing is vulnerable for a pullback, is what I'm suggesting on that content of looking at the two volume indicators. All right, so let me finish here and wrap this up for you guys so you can see the comparison that I was going on. If the S&Ps took out their August high and the VXX couldn't take out its August lows, isn't that like kind of a convergence pattern? It would show that something fishy is going on with the market, right? And that would be, if that was your conclusion, that is a great one, because we actually talked about this at that Chicago event at the CME that I participated, showing people different strategies for trading S&Ps. It's kind of funny because one of the board of governors was in the presentation and gasped because I brought in a CBOE. But my intention was to actually just share with everyone, if you're trading CME product like the Emini S&Ps, this is a great way of understanding the relationship, and you may get better, clearer signals by looking at a related yet inverse product. And that's what I'm saying. We had bullish convergence on the VXX, meaning S&Ps went down and made a newer high. This should have made and gone down and made a newer low, and it didn't. There's your convergence type of pattern. Now let me share with you the volatility product, the VXX, and I'm going to share that with using the volume tools that we have, right? And go through this real quick. And if you have the Person Algo Optimizer, pay close attention to this. This is fabulous. Looking at the market here in terms of volume and what's going on. So let's get this up here and let's take a look, see what we have. This is what I want to focus in on, what led up to today, another event. Besides all the models being long and a buy signal there, let's look at the quality of the market here as it relates to the information at hand in the page. We know that it's what? Made a newer low in price. Same time, we're looking at a different indicator that seems to be up to this point right here, making higher lows. We also look at this on balance volume, and it suggests it's made new lower high, lower low. If you're just using this as a guide to determine the strength or weakness of a trend, when a price action goes down and on balance volume goes down, it signifies there is selling pressure intact. when a market makes a newer low and on-balance volume coincides with that newer low, the theory is that it can continue lower. My argument is something's going amiss in this day and age, and something is changing, because here's an inverse look-see at the R volume indicator that we created as a part of not only a proprietary package but also for the lifetime persons indicator here at TradeStation. Clearly, you can see as the market made a newer low, our volume indicator made a higher low. So now all you guys that have the Algo Optimizer in the lifetime, the VIPers, this volume indicator is select, it's unique, it's powerful, it is extremely sophisticated in helping to understand bullish convergence patterns. So if I'm questioning whether or not the S&Ps are going to go down, then look at the inverse other products, or it's kind of like a correlation factor. What does the VXX look like? Gosh, we have market volatility. If the stock market's rising to new all-time highs and the media is pumping this all out, shouldn't the VIX be going down? And if it is going down, why is it going down on higher volume reading in this content? So there's your bullish convergence in price to indicator, but there's your bullish indicator using the person volume indicator. That's very special. So bullish convergence and bearish divergence patterns are extremely important. They don't show up at all tops and bottoms, but they do show up a lot. Now, the funny thing is that we're having this mentoring class. And the reason this is funny is because everything that I kind of just shared with you today about the pivots and the volume is in a lot of the information can be found in our DVD course that is from a 3-day seminar. It's 9 videos. I want everyone to have gone through that. And then we are meeting 2 weekends on Saturdays, 2 hours each. We are meeting to go over an amazing amount of information. Namely, we're going to refresh your technical game strategy with this intensive 3-day seminar online class that you should be taking and have access to. Next, we're going to develop, this is different, a trading plan for stock and futures traders. So what is your plan? What indicators? What's your checklist? We're going to develop that with you. We're also, most importantly, going to focus on preparation techniques for establishing mental fitness. This is probably one of the most important parts of your trading that is least done by the masses. And every once in a while, you're going to come across possibly a trader's block. Maybe you're going through one right now where you hesitate and you're not sure and you need to go fuddle through something else. Or if you find yourself always kind of in the bathroom when the big move happens, what is going on with you that's hindering your success? We've got the answers, and I have specific techniques to help you improve your skills to overcome trader's block. And also the techniques used to help break down a trader's fear. Algo system, but people can't pull the trigger, or they don't turn it on, or they want to watch. What is causing people not to trust the system? This is something that we also, whether it's a system you created or a system that you've bought, or it's an algo optimized program that you've put together, what's holding people back? The only thing that can hold you back from using information like this is you, the user. And that's what I'm going to be doing, is helping individuals improve themselves by these specific techniques and the outline that we're going to cover this weekend. So bottom line, go to our website at personsplanet.com/summer school. There's the link right there, /summer school. Sign up for that. You can watch this video here. It's also a very important video on helping people determine what we're going to be covering, as well as what trades and how to trade better. Next, this is the DVD course that I was talking about, and so far a lot of the information that we will cover was in some of these trade signals that were generated right off of the person algo optimizer based on that information. So fabulous time. I thank you for watching. I hope you got a little bit of value out of at least determining what the heck did my tweet mean with the volume divergence, what's going on in the markets right now, and again, how can we help you become a better trader? come see us at John Persson Summer School. Thanks for watching.